Hello, everybody. Hello, everybody. Let me just set my phone so that I'll be able to read the questions. Hello, everybody. Hello, everybody. Hello, everybody. Welcome to our first Women in Forex webinar. Hoping you're all excited as I am. I even feel like screaming right now. I even feel like screaming right now. So don't mind me if I keep on looking at my phone. I'll just be reading questions and all of those stuff, making sure that I'm communicating with you guys. Just for warm up, small warm up. Just drop where you from. Just drop where you from, the country you from. Just drop it right there. Let us know where you from. Let's know each other. Let's make friends. You know the vibes. So yeah, just let me know where you from. Just let me know where you from. Drop that country right there. Personally, I'm from South Africa. I'm from South Africa in Joburg. Let me know where you're from before we even start. Let us have a small warming up. Let us warm up. Okay. Cape Town, we have PE, South Africa, Pretoria, South Coast, Durban, Joburg. That's nice. That's nice. That's nice. That's nice. I'm so happy to be with you guys right here. It's a complete honor. It's a complete honor to be with you guys. Hoping you're all excited as I am. But without any further waste of time, let us start with today's. Let us start with today's session. So today we'll be going through what do you need to know to make your first trade. Hoping you'll all went through the PDF that we sent you guys in order to be able to understand what we will be talking about today. Let me just check the comment section. All right, noted. I really appreciate the feedback and the energy. I'm loving the energy. All right, I'm loving the energy. I'm loving the energy. So, what do you need to know to make your first trade? And the speaker right here in front of you is Tiran the GOAT. Disclaimer: any opinion, new research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. That's our disclaimer right there. Let's see the comment section. Hey guys, I'm so happy and excited to be with you guys. Let's take everything step by step. Feel free to ask as much questions as you can. Even on once we're done with the session, you'll be able to access me through Telegram group in order to ask all the questions you want to ask based on our lesson that we are hosting today. So now let us go through the next slide. Obviously, I have to tell you about myself first before I even continue. You'll have to know who you are talking to before I even tell you more about Forex, All right. As I said, don't mind me if I'm looking at my phone and a bit slow because I'm reading the questions this side in order to communicate with you guys. At the same time, this side, it's almost like 1 minute later, so I gotta play around everything. So right here in front of you guys is Tiran the GOAT, one of the best female traders in Africa, I believe. I'm a full-time trader with over 3 years of experience. I'm a mentor. As I said, I'm the best female trader in Africa, I believe so. I provide simplicity in the Forex market And I've attended a lot of seminars as a guest speaker on the simplest profitable strategy. That for sure, I'm so confident about it. So, yeah, as I said, don't mind me. Let us move on to the next slide. That was just me explaining myself to you guys, making sure that whenever we are continuing, or when we are continuing, you exactly know who you're talking to, or you actually know what kind of breed you are dealing with, So let's go. Let's go. That's me right there. Let us move on. So, what are the topics are we going to be covering today? Today, we will be covering what is a candlestick, how to read a candlestick, trend lines, types of trends, examples of an uptrend and a downtrend in practical, support and resistance, how to read support and resistance, example of support and resistance in practical, what are stop loss and take profit, how stop loss and take profit work in a buy order and a sell order, and then entries, and then summaries from there. Those are the topics we'll be covering today. Those are the topics we will be covering today. So far, can I just get a thumbs up if you are still with me? Can I get a thumbs up if you are still with me? Let's get thumbs up right there. We're ready for you. Okay. Can I get thumbs up if you are still with me? Thumbs up. Thumbs up. Okay. So far, everything is good. I guess we can continue. So, first things first. One, I'm repeating this for the last time. Don't mind me if I'm looking this side. I'm trying to communicate with you guys. So, right here, I'll just make sure I don't skip anything. I'll just be making sure I don't skip anything. So, I have some few notes, but let us just focus right here. So, first things first, what is a candlestick? What is a candlestick? A candlestick is a type of price chart used in technical analysis that displays the price's high, low, open, and closing for a specific period of time. So in technical analysis, or I should say technical analyst in simple terms, I can say that they'll be analyzing the movement of candlesticks. So that's what technical analysis is all about. You'll be analyzing how candlestick moves and all of those stuff. As they usually say that technical analysts usually look at previous data in order to determine what are our future price movements. So that is exactly what they use when they're analyzing that. They'll simply be using these candlesticks to analyze that or to predict future price movements. So a candlestick is made up of two aspects, or two things I can say. It's made up of a body and a wick, or I should say a shadow. Here's the body. It's made up of the body, the wick or shadow. I can say it's made up of these two things. It happens that sometimes we don't have a wick and a candlestick, but the body is always there no matter how small it can be. I repeat, it happens that sometimes we don't have a wick or shadow and a candlestick, but the body is always there no matter how small the body can be. So now let me explain on how the candlestick forms in a bearish candlestick. So, and a bearish simply means sells, or it simply means that we are going down. That's bearish. Bearish simply means that it is a sell or we are going down. So, in that being said, if we are going down, obviously our open will start from the top. So, here's our open right here. In us having our open right here, we can definitely see that price open right here. After price opening right here, it went up, meaning that it first bought, it went up and created this high, and then failed to maintain price at that level right there, and did what? And then started selling till it's reached this level right here, creating a low. And it's selling till this level right here. It still failed to maintain price at that level right there and then came back to close right here. That's how our wicks or shadows are formed. It's whereby price opens and spikes up, then fails to maintain price at that level right there, and then goes down, fails to maintain price at that level right there, and then close is above. That's how our wicks or shadows are created. Are we together on that part? If are we together on the bearish candlestick? If you are still confused with that, definitely you'll understand it once I speak about the bullish candlestick, because it's the same thing, it's just that it's the opposite of each other. If we are together, just simply give me 100%. Give me 100% if we are together. Give me 100% right there so that we can move on to the bullish candlestick. All right. Okay. So for as long as I'm getting a lot of yeses, it means we are still together. So moving on to the bullish candlestick. As I said, bearish simply stands for what? For sells, or we going down. And then bullish simply stands for our buys, meaning we are going up. It's up to you. Me in school, I used to cram. So if you want to cram like me, you can just say bullish, it's a buy, BU, and then bearish, it's the other one. I used to cram in school, so I'm also teaching you that. Just joking. But yeah, bullish is our bias, which simply means that we are going to the upside. So how does a bullish candlestick form? How does a bullish candlestick form? A bullish candlestick, it's whereby our open will definitely start below. Why? Because we are definitely going up. Meaning the candle will open from below. It will be opening from the downside going to the upside. So if we are looking at this candlestick right here, what can we say? We can say that price first sold, or I should say first went down till this level right here, creating this low and failed to maintain price at this level right here, and then went up, meaning it bought. It bought from here till this level right here, creating a high. It still fails to maintain price at that level right there or at that high, and then came to close in this level right here. That's how our wicks or shadows are formed. It's whereby price will do what? Price will first sell and fail to maintain price at that level right there, and then goes up, creating the high, still fails to maintain price at that level right there, and then closes wherever it closes. So that's how our wicks or shadows are. That's how our wicks or shadows are created. To those people that said they don't understand, did you get it now with our bullish candlestick? As I said, that our bullish candlestick is the same as our bearish candlestick. It's just that it's the opposite. Our bearish is our sells and our bullish is our buys. And our bearish being our sells, our open starts from up going down because we are selling, and our open from our bullish candlestick starts from down going up. Did we get that? Did we get that? Did we get that? Those who say they don't understand, can you kindly comment if you got that, so that we can move on? Did you all get that? Waiting. Okay, let's see. Let's get 5 more people to say yes, and then I'm moving on. 1, 2, 3, 4. Okay, please explain one more time. That's the 5th person. All right, I'll just explain the bearish candlestick one more time. Explaining the bearish candlestick one more time. This is how a wick or shadow is formed. This line right here is called our wick or shadow. Ne? So far, in order for me not to say or, can I just use one word? I'll use it as my wick. Alright, so how are our wicks formed? It's whereby price opens in this level right here. As we are selling, it simply means that we are going down. As we are going down, it simply means our candle our candles open will be from the top. So right here, price opened in this level right here, and first bought went up, creating this high. And then creating this high right here, it fails to maintain price at this level right here, and then sold from here till this level right here, which is written as our low. And then price still failed to maintain price in that level right there, and came to close in this level right here, where it's written close. That's how our wicks or shadows are formed. That's how our wicks or shadows are formed. Hoping now you'll have got it. All right, got it? Hoping now you'll have got it. Yes, I understand now. All right, so let us move on to the next topic, which is our trend lines. Hoping everyone got that. So now let's just move on the next topic, which is our trend lines. Let us move on to our trend lines. I didn't forget anything right here, so yeah. So, all right, let me check the comment section quickly. Got it. All right. So, in us moving on to trend line, what is a trend line? It is a chart pattern defined as a series of highs or lows that form a straight line showing the direction of price. It is a chart pattern, underline that. It is a chart pattern defined as a series of highs or lows that form a straight line showing the direction of price. Which I can say in simple terms, it is a tool used by technical analysts to connect a series of highs or lows. A trend line is made up of a minimum of 2 or more touches. The more the touches, the stronger the confirmation will be. So, as I said, that technical analysts usually look at previous data in order to determine what are our future price movements. So, what did I mean by that? Let me just make a typical example. Let's say we have a square, a circle, and a triangle. And then again, we have a square and a circle. What's the next shape? That's a question to you guys. We have a square, a circle, and a triangle. Square, circle, triangle. And then we have a square, circle. What's the next one? What's the next shape? That's a question to you guys. I repeat the question. We have a square, circle, triangle, and then a square, circle. What's the next shape? What's the next shape? Okay, let's get more people answering. What's the next shape? What's the next shape? 2 more people. Danko. All right. So the next shape is a triangle. How did you know that? It's because you look at the previous pattern, the previous flow, the previous trend in order to determine that the next shape was a triangle. So as I said, we have a square, circle, and a triangle. Square, circle. You got that the next shape was a triangle. Why? Because you looked at previous pattern, previous flow, previous trend in order to determine that triangle. So now, if we're now relating this to Forex, the same thing. They look at previous data in order to determine that there are high chances of price moving in this certain direction. So now, if we're going back to our trend line, so it is a series connecting highs or lows. So, and that being said, we can definitely see right here that we are connecting what? We are connecting lows. Price touched here and went up, or I should say bought. Came back and touched here and went up, or I should say bought. Let us speak in Forex language. I'll just stick to bought. Price came in this level right here and bought, came back and bought. And then, as I said, that a trend line is made up of a minimum of 2 or more touches. The more the touches, the stronger the confirmation. So when price was going to come here for the 3rd time, you as a technical analyst, you were going to predict, or you were going to have it in mind that there are higher chances of price doing what? Of buying from here. Why? Because previously it's what it did. Previously it did what? Whenever it's reached this level, it went up. Whenever it's reached this level, it went up. So right here also, you were most likely to buy. Why? Because previously it always bought whenever it's reached here. So as I said that technical analysis Technical analysis is all about the trend, the flow, the pattern of price movement. So also right here, you can see now the trend or the flow that whenever price reaches this level, it goes up. Whenever price reaches this level, it goes up. So if price reaches this level again, it will go up. Definitely, if price reaches this level again, it'll go up. So that's how you predict your movement when it comes to your trends. Ne? That's how you predict your movement when it comes to your trend lines. So now going to our next trend line drawn, which is connecting a series of highs. As you can see, it's connecting a series of highs. Price reached this high right here and then turned, meaning that it sold. It went down. As I said, let's stick to Forex language. Price reached this level right here and then sold. Price reached this level right here and then sold. So as a technical analyst, you were going to predict that if price reaches this level again, it was going to definitely do what? It was going to definitely sell. Why? Because previously it's what it did. That's the trend or the flow of price action in this level right here. Even right here, you were going to predict that price is going to sell. So if you understood what I just explained when it comes to our trend lines, kindly hit a thumbs up. If you didn't understand, let me know under the comment section. If you understood, just hit a thumbs up. Let's go. Thumbs up. Let's go. All right, let's have thumbs up if you understood what I just explained. I'll just wait a bit. The trend touches both the highs and the lows. All right, so far let me answer Jasmine's question. What if the trend touches both the highs and the lows? We definitely coming there. If it touches the high and previously it had been touching the highs, you'll definitely want to sell that. If it touches the low, if previously it was touching the lows, you'll definitely want to buy that thing. But we are coming there. Don't worry. We are coming there. When's FM asks me to explain the cells again. All right, in me explaining this side, a trend line is made up of a series of lows or highs. And that being said, right here we can definitely see that price reached this level right here and then sold. Price reached this level right here and then sold. You as a technical analyst, right here, you were going to predict that if price reached this level right here for the third time, it is going to definitely sell. Why? Because you definitely know the definition and you understand what makes up a trend line. As I said, that a trend line is made up of a minimum of 2 or more touches. The more the touches, the stronger the confirmation, or the stronger that trade will be, or that level will be respected, I can say. So definitely you have 1-2 touches. The third touch, you were going to definitely say, okay, we have higher chances that price can sell from here because previously it's what it was doing. As I said, the technical analysts usually look at previous data in order to determine what are our future price movements. So these are our future price movements whereby you will be selling from here, looking at that previously. That is exactly what was respected. Are we together? Are we together? Are we together, guys? Hoping now we are together. Let's see. Let me get 5 more thumbs up and then I'm moving on. 5 more thumbs up and then I'm definitely moving on. 1. Let's go. 2. You can take a chance. So on third touch, you can take a chance. Definitely. As I said, that a trend line is made up of a minimum of 2 or more touches. The more the touches, the stronger the confirmation. So on third touch, that's your go-to. Girl, you fast. All right, let me try and be slow. What happens when you sell or buy? We coming there. All right, let us move on. I'll try and be slow. Sorry, Forex just excites me in a way that, sometimes I get carried away. So yeah, guys, sorry about that. I'll try and be slower. I'll try and be slower. I'll definitely try and be slow. When is a trend line valid on TF? All time frames. It's valid on all time frames. You are faster. Please slow down. All right, definitely I will slow down. Right now, I'm at slow mode. Trust me. Trust me. I'm at slow mode now. All right. All right, let us continue. Three types of trends and how to read them. We have in Forex, we have three types of trends. We have an uptrend, we have a downtrend, and a sideways trend. Those are the three types of trends we definitely have in Forex. There are no other trends besides these three. It's either an uptrend or a downtrend or a sideways trend. So, let us start with an uptrend. What makes up an uptrend? An uptrend is whereby we are going up. As we are going up, we most likely to do what? To buy long for a very long time and then sell short, sell for a short period of time, which that in Forex terms, it's considered as swinging and scalping. Swinging, it's whereby you are holding a trade for a very long time, and then scalping is whereby you are holding a trade for a short period of time. So in a buy or in an uptrend, we are most likely to swing our buys and most likely to scalp ourselves. But we are not there for now. We'll cover that on our next lesson. So far, let us look at our uptrend. Our uptrend is made up of a series of higher highs and higher lows. Higher highs and higher lows. A high that is higher than the previous one and a higher low. A high that is higher than the previous one and a higher low. That's what makes up an uptrend. An uptrend is made up of a series of higher highs and higher lows. Higher highs and higher lows. Okay, sorry. An uptrend is made up of a series of higher highs and higher lows. Higher highs and higher lows. This is the pattern, or I should say the rhythm or the flow of price movement. As you can see that we drew our trend line connecting our highs and also drew our trend line connecting our lows. So that's what makes up an uptrend. This is the rhythm or the flow of price movement, whereby whenever price reaches this level, it turns, goes down. Whenever price reaches this level, it turns and goes up. Whenever price reaches this level, turns, goes down. Whenever price reaches this level, turns and goes up. So to the person that asked me what happens if price turns on the highs or turns on the lows, this is what happens. Whenever price reaches this level, it turns. Whenever price reaches this level, it turns. Whenever price reaches this level, it turns, which this now is considered as a second touch connecting highs. Whenever price reaches this level, it turns, which now is considered as a third touch on our series of lows, of connecting our lows. Therefore, if you are looking forward to buy, you were going to buy from here and make sure that when price reaches this level, you are out. You buy from here, and then when price reaches this level, you are out. Why? Because you can definitely see that in a series connecting our highs, price usually turns from here. Price usually turns from here. So you'll want to be out because you definitely know that price will turn. So, and then if price reaches this level right here, this will be your third touch. As I said, a trend line is made up of a minimum of 2 or more touches. This would have been your third touch. As it is your third touch, you would have most likely sold from here because you saw that previously price has been going down or selling whenever it reaches this level right here. Is this session recorded? Can I replay it later? Yes, it will be recorded. Got it. Your explanation is so easy for me to understand. Huh? Your explanation is so easy for me to understand now. All right, that's what makes up an uptrend. Are we together with an uptrend before I even continue to a downtrend? Can I get thumbs up? Can I get a thumbs up? Can I get a thumbs up? Are we together? Let's get 5 more people to give us a thumbs up. All right. So now let us move on to a downtrend. Buy low, sell high. Let us move on to a downtrend. And us moving to a downtrend is made up of a series of lower lows and lower highs. So, do you connect from the week or the body of, or the body? Both. Most likely, I'd prefer you to connect from the week, but we'll go to our practical and then you will get it from there. Which time frame should one start the trend line? In all time frames, trend lines work. Yes, it simply means that you buy low and sell high. So let us move on to our downtrend. In us moving on to our downtrend, we can definitely see that we are going down. In us going down, we are most likely to sell for a long period of time and then buy for a short period of time. So, as I said, that a trend line is a series connecting highs or lows. Is a line connecting a series of lows or highs. Right here, we can see that it is a series of highs connected, it is a series of lows connected. Its downtrend is made up of a series of lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. A low that is lower than the previous one and a lower high, a low that is lower than the previous one and a lower high, and so on. So, as you can see that firstly, price reached this level right here and then sold, reached this level right here and then bought. Reached this level right here and sold, giving us this as our second touch. 1, 2 touches connecting our highs, reached this level right here and then bought. Reached this level right here and then turned. Right here, we can definitely see that this is our third touch in our trend line. It's 1, 2, 3. As it is our third touch, we now remember that, okay, a trend line is made up of a minimum of 2 or more touches. And this is our third touch. As it is our third touch, we'll want to do what from here? We will want to definitely sell from here. Why? Because whenever price reaches this level right here or this trend line of ours, it turns from here. So we definitely now see that this is the rhythm and the flow of price movement, that whenever it reaches the trend line right here, it goes down. Whenever it reaches the trend line right here, it goes up. Hoping that makes sense. Hoping that makes sense. Before we move to a sideways trend, I just want to make sure it makes sense. You're making things more easy. Should I make them hard? I'll definitely make them hard. Just joking. So yeah, that's the aim, guys. That's the aim. It does. All right, let's get 4 more people to tell me that it makes sense. Okay, making rants. All right, so let us move on to our sideways trend. In our sideways trend, what makes up a sideways trend? A sideways trend is made up of equal lows and equal highs. There is no high that is higher than the previous one or low that is lower than the previous one. That's what makes up our sideways trends. It's equal lows or equal highs. It's simply ranging, it's moving sideways. There's no direction of going up or down, it's just moving sideways. That's our what? That's our sideways trend. And we don't want to trade such a trend. We either want to trade an uptrend or a downtrend. Hoping that makes sense also. That was too simple. That was too simple. We don't want to trade a sideways trend. We only want to trade an uptrend or a downtrend. Those are the three types of trends we have. An uptrend is made up of a series of higher highs and higher lows, and then a downtrend is made up of a series of lower lows and lower highs. Do you choose which trend to use? The market chooses for you which trend is there. Remember that the trend or rhythm of flow is provided by the market, and then you check from there which trend is right there. But we'll definitely go on our practical side and you'll definitely understand it from there. So, practice identifying the three types of trends on a live chart using our trend line tool. Does the sideways trend mean consolidation? Yeah, you can say so. You can say so. I'm not fully saying yes, because a consolidation market can sometimes go to the downside. A consolidation market can sometimes go to the upside. So it's why I prefer using the term ranging. That's why I prefer using the term ranging. So right here, let us spot our trends. And not spotting our trends, so let me just explain first. These are our candlesticks. The pink ones are our buys. The black ones are our sells. Whenever you see a pink candlestick, it simply means that it's going up or buying. Whenever you see the black candlestick, it simply means that it's going down, or I should say selling. These are our candlesticks. These are our candlesticks. These charts, you can simply get it from the Octa app. They provided right there. In order, everything is just simple and straightforward right there. If you have the Octa app, you'll be able to access these charts. These are your candlesticks as I explained. So looking on our left, we can definitely see that that's where our tools are at. If you can click right here, you can definitely see here is your trend line, which is the tool we will be using right now. So now let us spot our trends. As I said, a trend line is made up of a minimum of 2 or more touches. We'll spot 3 or 4 different trend lines. Actually, different trends, not different trend lines. So right here, we have what? We have a downtrend. Why am I saying this is a downtrend? Because it is connecting a series, or it is made up of a series of lower lows and lower highs. How many touches do we have right here? On our highs, we have 1, 2, 3, 4 touches. So when price reaches this level right here, we will definitely predict that price has high chances of doing what? Of going to the downside. Let me just read the comment section quickly. Okay, for holding positions for a very long time, it's swinging. For holding positions for a short period of time, it's scalping. Short period, scalping. Long period, swinging. I got it together, so no trading in a sideways trend. No, we don't trade a sideways trend. We want to trade just an uptrend or a downtrend. A sideways trend is made up of a series of equal lows or equal highs. There's no high that is higher than the other or low that is lower than the other. So right here, okay, let me put this right here so far for questions. So right here, we can definitely see that we are in a downtrend because we are seeing a series of lower lows and lower highs. A low that is lower than the previous one, and a lower high. A low that is lower than the previous one, and a lower high. So if price reaches our trend again right here, it will be our 1, 2, 3. It will be our fourth touch, which will definitely predict that price has higher chances in going down. And then coming right here, we can definitely see that we have our 1, 2, 3 touches. It's why price bought from here. It's why price bought from here. Why? Because it's our third touch. Whenever price reached this level, it went up. Whenever price reached this level, it went up. Even now, price reached this level, it went up. So that's how our trend lines work. Practical is making sense. Now, what would be the confirmation for one to sell in this trend? To sell, it is the touch of the trend line. So far, that's the only confirmation we have learned. So I'll just stick to that. The more we add confirmations, the more confirmations you will have in order to have a valid trade or a stronger trade. Let me just put it that way. Does a sideways trend indicate a reversal? Nah, I wouldn't say that. It's just ranging. So this is our downtrend. Let us try and spot another trend. And as spotting another trend, we can see, as I said, a trend line is made up of a minimum of 2 or more touches. We have another trend right here, which I'm connecting a series of lows. We have how many touches? 1, 2, 3, 4 touches. Whenever price reached this level right here, it went up. Whenever price reached this level right here, it went up. Whenever price reached this level, it went up. Even right here, it went up. All right. Even right here, whenever price reached this level right here, it went down. Whenever price reached this level right here, it went down. Whenever price reached this level right here, it went down. Another trend, downtrend. A downtrend is made up of a series of lower lows and lower highs. An uptrend is made up of a series of higher highs and higher lows. Please show us those higher lows with an arrow. All right, no problem. No problem. No problem. Right here in this uptrend, we have a higher high, a higher low, higher high, right here. I'll just end it right here. The rest that happened right there, we'll move on to it on our next lesson. So right here we have what? A downtrend, which is made up of a series of lower lows and lower highs. I'll mark it even right here. Lower low, lower high. Lower low didn't touch the trend, lower high touched the trend. Lower low didn't touch the trend, lower high didn't touch the trend. Let's go back, touch the trend, lower low, lower high, lower low. All right, let us move on, trying to spot other trends. And as trying to spot other trends, I'll just zoom out like this in order for me to be able to see. Okay, this, I think it will be a perfect example. A series of lower lows and lower highs again right here, which simply means that we are in an overall downtrend. And then let me connect my series. Lower low, lower high, lower low, lower high. Whenever price reached this level right there, you were going to predict that it's going to go down because previously it's what it did. This would have been our third touch. Our third touch, everyone right here, connecting our lows. You would have bought till this level right here and definitely came out from here. Why? Because you definitely see that previously, whenever price reaches this level, it turns lower high. That's our downtrend. Let me just read the questions. Are the touches 2 weeks only? No, wicks and the body. If there is a wick, there's nothing you can do. If there is a body, there's nothing you can do. Remember that I said a candlestick is made up of 2 aspects. It's either, it's made up of a wick and a body. It happens that sometimes a wick won't be there, but the body is always there no matter how little the body is. So it can touch wicks, it can touch the bodies. So hoping that makes sense. What time frame do we use to draw a trend line, and what time frame do we use to enter a trade? We haven't reached it there, but drawing our trend line, you can draw it in any time frame. Please, what is the confirmation for entries? So far as we learned about trend lines, I'll speak about trend lines. The other things we'll speak about it as we go on so that we don't confuse anyone, even those who are beginners. We don't want to overcrowd them with too much information that I haven't taught. So we gotta be together or work step by step. So in this case, in confirmation of entry, right here, as I said, that a trend line is made up of a minimum of 2 or more touches. As you would have drawn your trend line like this, you would have said 1, 2 touches, and then you try and connect your trend line. And then if you're connecting your trend line and then price reaches this level right here, you were going to sell as it would have been your third touch. Why? Because previously it has already have completed 2 touches, as they say that a trend line is made up of a minimum of 2 or more touches. So after the 2 touches, you definitely can predict that price has higher chances in doing what? In going down. So you were going to sell from here, expect price to go up. When it reaches this level again, you were going to sell right there. Sideways, sometimes it's consolidation. You can say that a sideways is a consolidation trend, I can say, but on my side I prefer using the word ranging, as I said, because sometimes a consolidation can go up, sometimes a consolidation can go down. Yes, work step by step, definitely. So let us try and spot one more trend. I just hope I get a sideways trend. All right, okay, it's not really sideways. All right, so here's a sideways trend right here. I can use this as my sideways trend. This can be used as my sideways trend. Why? Because we are not moving up or moving down. Price is just moving sideways. Price reached this level, went up. Price reached this level, went up. Failed to reach, went up. We are just moving sideways. So that's our sideways trend. And then last but not least, we have our uptrend. And our uptrend, as I said, it's made up of a minimum of 2 or more touches. Right here, definitely see that price reached this level and went up, reached this level and went up. So if I'm connecting my series of highs, also I would have connected it in this kind of manner. In this kind of manner, that whenever price reached this level, it went down, sold. Whenever price reached this level, it went down. As our third touch, we're going to predict that price will sell again, because previously it's what it was doing, reached this level right here and then sold. Hoping everything makes sense from here. Let us go back to our slide. Hoping everything that makes sense, hoping everything makes sense. But it will even make more sense as we continue. Can I just get confirmation that we're moving on the right pace? I'm no more fast. Can I get that? Am I still fast? Kindly let me know under the comment section if I'm still explaining fast. Let me just check. Patiently waiting for people to respond. If am I going with the right pace? Am I going with the right pace? We are almost done. Don't worry, guys. We are almost done. We are almost done. Don't worry. Okay, let me put this here. Normal fast. Okay, now I don't know what you'll want from me. I definitely don't know. Alright, so for as long as a lot of people are still good, okay, everyone actually is understanding. We are almost done. So now let us go through support and resistance. Support is when price is going down, then it stops and turns and starts going up. Support is when price goes down, stops and turns and starts going up. Support can be regarded as our floor. It supports price in going up It supports price and going up. It supports price and going up. That's our support. Resistance is when price is going up, then it stops, turns, and starts going down. Resistance is when price is going up, stops, and turns, and goes down. Resistance is when price goes up, stops, and turns, and goes down. That's our resistance. Our resistance can be considered as our roof. Our support can be considered as our floor, while resistance is considered as our roof. What makes up a valid support and resistance, or valid support or resistance? It is a minimum of 2 or more touches. Just like the trend line, now we're speaking about support and resistance. It is made up of a minimum of 2 or more touches. Support and resistance is an add-on the confirmations you will use in order to enter your trades, because you won't just use a trend line confirmation only on its own and then you were going to take that trade. No, we will keep on adding on confirmations and then we combine the confirmations together in order to come out with a strong trade. You know, so right now we are going through support and resistance. Support is when price is supported to go up, and resistance is when price is resisted to go up, but to go down. Meaning price is resisted not to cross above but to go down, and then support is whereby price is supported not to go to the downside but to go up. Is it a safe place to trade in the ranging market? Totally not. Totally not. As I said, that we don't trade a ranging market. We only trade an uptrend or a downtrend. So that's support and resistance. Support is whereby price is supported to go up, while resistance is whereby price is resisted not to cross above but to go to the downside. That's our supporting zone and our resistance zone. Simple and straightforward. Can we move on? Can we move on? Can we move on? As I said, that our support and resistance is made up of a minimum of 2 or more touches. The more the touches, the stronger the confirmation. If we are to use this method and taking our entry, we would have said 1, 2 touches. We wait for our third touch. Once price reaches this level right here, you were going to predict that price will go to the downside. Why? Because previously it's what it did, which goes back to what I have been saying, that technical analysts usually look at previous data in order to determine what are our future price movements. So this acting as our future price movement, you were going to predict that price will sell from here. Why? Because previously, whenever price reaches this level right here, it sells. Whenever price reaches this level right here, it sells. Whenever price reaches this level right here, it sells. So moving on to our support, 1, 2, 3. As I said, that as support or support, resistance, and trend line is made up of a minimum of 2 or more touches. The more the touches, the stronger the confirmation. 1, 2. The third touch, you were going to predict that price has higher chances in doing what? In buying, or I should say going up. Why? Because previously it's what it has been doing. And what it has been doing. So as a technical analyst, you were going to buy from here. You were going to buy from here because previously you saw that whenever price reaches this level right here, it turns. Whenever price reaches this level right here, it turns. As I said, support acts as our floor, resistance acts as our roof, which resists price from not crossing above but to go down, which supports price from not crossing below but to go up. That's our second confirmation. Firstly, we covered trend lines as our confirmation. Now we are covering support and resistance as our second confirmation and taking our trade. Is that sorted? Can we move on? Can I just get 5 thumbs up and then we going? Let's go. Let's go. We are almost done. Don't worry. Okay, patiently waiting for the comments. Okay, yes. Can I get more people? Where can we get these notes? I created these notes. We are together, okay? The video will be recorded, so you can just go through the video. So time frame doesn't matter for support and resistance. Nope. Doesn't matter. Doesn't matter. Okay. Let us move on. And us moving on, how to read support and resistance. So this is how it works. Screenshot helps with the images. Don't worry, the session is recorded, so you'll be able to watch it over and over and over and over and over again. So, how to read support and resistance. Support can turn into resistance, and resistance can turn into support. Support can turn into resistance, and resistance can also turn into support. All right, what do I mean by that? What do I mean by that? So, as I said that whenever we are below a certain level, that level can be considered as our resistance. Whenever we are above a certain level, that level right there we are above in can be considered as our support or floor. Whenever we are below a certain level, underneath a certain level, that level right there can be considered as our resistance. And whenever we are above a certain level or on top of a certain level, that level right there can be considered as our support. So this is how it gets tricky to some people. It gets tricky because they have the mindset that it always should be in that way. That price is supported to go up. Whenever price reaches this level, it goes up. Whenever price reaches this level, it goes up. At the same time, whenever price reaches this level, it goes down. Whenever price reaches this level, it goes down. If that was the case, everyone would have been profitable. It would have been just one thing moving in one direction with no change. So that's where support and support turning into resistance, and resistance also turning into support. When does support or resistance turn into each other? So as you can see right here, we have been supported to go up, and resisted to go down until price came right here and broke our support or went below. Breaking our support is going below that certain level. We can definitely see that price broke our support and came back to retest, which retest is the process of breaking a certain level and coming back to touch that certain level. That process right there is considered to be as our retest, whereby price breaks a certain level and comes back to retest or touch that certain level. That process right there is called or considered to be our retest. So price broke our support right here, went below our support, came back to retest and went to the downside. So as it came back to retest and went to the downside, now how are we? We are now below that certain level, and anything below a certain level, that level right there is considered to be our resistance. That's how our support changes into our resistance. But let me repeat. In me repeating, we can definitely see that whenever price reached this level right here, it turned. Whenever price reached this level right here, it was resisted to go down. Whenever price reached this level right here, it was supported to go up. Whenever price reached this level right here, it was supported to go up but resisted to go down from this level right here, which we can definitely see that when price reached this level right here, it's now didn't respect our support. Instead, it broke below our support and came back to retest. This is the process of a retest, whereby price breaks a certain level and comes back to touch that certain level. That is considered to be a retest, and then went to the downside. From there, once we are below that certain level, as we broke our support, we are now below, which also clicks that whenever we are below a certain level, that level right there is now considered to be our resistance. That's how our support changes into our resistance. Now we have now we are below this certain level, now considered as our resistance. We now have to look for a new support. We now have to look for a new support. How do we look for a new support? We look at previous data in order to understand where future price movements are going. So that's how we find our new support. This will be now our new support. This will be our new resistance right here. Are we together? Are we together? Is this phenomenon observed when a trend is ranging? No, not really. But we'll definitely go on the practical side. It will make much more sense. It will make much more sense once we go on the practical side. Okay, does a retest indicate that price is going to move in that direction? A retest simply indicates that price is now changing direction. It's going to the downside because it happens that price spikes a little bit down and then goes back within, which that is called a fake out, whereby price breaks a certain level and then goes back within that level. That's a fake out. And then a retest is whereby price breaks fully, comes back, and then goes down. That process right there is our retest. So as the third touch where you should have sold. Am I understanding correctly? Yes, definitely. On our third touch right here, that's where we could have sold, because we could have seen that definitely previously that's what it was doing, so we were going to predict that. Mind you, for example, as I made an example with our shapes, that we have a circle, a square, and a rectangle. We wouldn't predict the next shape if we don't have a repeated shape, so as we have a square, circle, and triangle, you wouldn't know what's the next shape. Maybe it's a star, maybe it's a diamond, because we're having different shapes. Until we repeat a square, we definitely can predict that, okay, maybe the next shape is a circle, because previously we had a square, circle, triangle. Now, square again. It might happen that we have a circle. So, because how will you find out that? Because we are now having like a repeated thing. So, exactly with resistance, obviously, you wouldn't enter your sell at your second entry, at your second touch, because you are not sure where the price wants to respect this or will even push to the upside. So, it's why we have to wait for our third touch. Maybe it's best to turn new graph type into line from Candlestick to draw support and resistance. Yeah, that's also okay. Yes, keep going. All right. Let us move on. Moving on. Moving on to a scenario whereby resistance is now changing into a support. Mind you, our support acts as our floor, our resistance acts as our roof. Support is whereby price is supported to go up, whereby resistance is resistance price not to cross above but to go down. So right here we can definitely see that price has been resisted all the time to go down, resisted all the time to sell, supported to go up, supported to go up. So definitely right here we can see now that we have broken our resistance. As we broke our resistance, we broke above our resistance, and anything above a certain level, that level right there is now considered to be what? That level right there is now considered to be our what? Is considered to be our support. So right here, that's how our resistance changes into a support. It's whereby we break above our resistance. As we are above our resistance, now that level right there is now acting as our support. Whereby we can also see that we broke above, came back to retest. The process of a retest is whereby we break above a certain level and come back to touch that same level. So a support is much like a valid support or resistance is made up of a minimum of 2 or more touches. The stronger, how is it stronger? Which one is stronger between the two? They're all stronger, but the most stronger level or zone is whereby our level or support or resistance, it once acted as support and resistance. That's a stronger level, I can say, whereby price once acted as support and also was resistant right there. This makes it a stronger level right here. So as it now acting as our support, having our first and second touch right here, you can definitely have confidence that price has higher chances in doing what? And going to the upside. Why? Because it once acted as resistant and now acting as support, and also we're having another touch. So now if we're counting touches right here, we are no more counting 1, 2, 3. Instead, it starts from here. It's 1, 2, 3. That's a valid zone, right? And it being a valid zone, we are also considering this touches as a significant strong zone or important zone. That price was resisted from here, and then we broke above, retested, and then we started being supported right here. We will be supported to go to the upside. So it can also break the resistant leg support. Yes. Support can turn into resistance, and then resistance can also turn into our support. Are we clear? Are we clear? Can I get a thumbs up? Can I get a thumbs up? Just give me 15 more minutes and then we'll be done. Can I get a thumbs up? Can I get a thumbs up if we are still together? How can you predict that might break the resistance and support? We can never predict that supports can be broken or resistance can be broken. It happens. It happens. So far, I'll just put it that way. I'll say it happens. The more we add on our confirmations, you'll definitely see that, okay, we're actually able to predict it in this way. So as I said, that I want us to take it step by step and not overstep other people that are beginners. So far, I'll just put it that way, that so far, let's just say we cannot predict it. Confirm if it makes a third touch. Yes, we can definitely confirm from a third touch. Can you please repeat what you just said? Yes. I said that we support can turn into resistance and resistance can turn into support. Support turns into resistance once price breaks below our support, and anything below a certain level, that level right there acts as a resistance. So resistance turns into our support once price breaks above that certain level, and once we are above a certain level, that level right there acts as our support. How do you check your charts on your laptop? All right, you simply go on Google, search Octa. Under Octa, you go to Trader. There is Trader Web, and then you click right there. Even on your phone, you are able to download the app, the Octa app, and then get your charts from there. All right, so definitely it's making sense. All right, now let us identify support and resistance on live chart. Let us now identify support and let us identify support and resistance on our live chart. Dance shapes. Where's our shapes now? All right. We get our rectangle to draw our support and resistance right here. We click on it and then we are able to draw. So our support and resistance is made up of a minimum of 2 or more touches. Below a certain level, that level right there can be considered as our resistance, meaning that this trend line of ours can be our resistance trend line. It's resisting price from not crossing above but to go down. This level right here, as we are above a certain level, as I explained, whenever we are above a certain level, that level right there can be considered to be our support. So price is supported to go up whenever it reaches this level right here. It is supported to go up. Whenever it reaches this level right here, it is supported to go up. So a support and resistance and also with our trend line have the same properties, whereby once our supporting trend line is broken and come back to retest, that means that we are now, once our supporting trend line is broken and then now we come back to retest, that means now we are now below that certain level. Our supporting trend line right here will now turn into our what? Our resistance trend line. So now drawing our zones using support and resistance. Right here, we can definitely see that or we can definitely draw our zone from here to here. You can definitely see that price was resisted to not cross above, but to go down, resisted to not cross above, but to go down. We broke our our resistant trend line. After breaking our resistant trend line, the process called retest took place because price broke this certain level and came back to touch that level, meaning that that's where our retest happened. We broke our resistant zone and then came back to retest it. My head is exploding. Don't worry, take it step by step. Take it step by step. So, as I said that our support and resistance is just an add-on, meaning we now have two confirmations. Imagine being able to spot your trend and then adding it with your support and resistance. Now we have what? We have our uptrend drawn. After having our uptrend drawn, also, let me just delete this so that we'll be able to see it correctly. Let me remove this one now. We have our uptrend drawn. After our uptrend drawn, price, whenever it reaches this level right here, it's supported to go up. Whenever it reaches this level right here, it's supported to go up. Whenever we reach our zone, it's resisted to go down. We broke our resistance zone, came back to retest. And as coming back to retest, we can definitely see that we are now at a point of confluence. What is a point of confluence? It's whereby we are supported more than once or resistant more than once. Right here, we can definitely see that we are above this supporting zone that we broke. Now our resistance turned into our support, and also right here, we are above our supporting trend line. Price is supported to go up right here, and also price is supported to go up right here, meaning we are at a point of confluence whereby we are supported more than once but twice. Two confirmations now. We are supported vertical, horizontal. All right. That confuses me at times. We are supported horizontally and also supported diagonally right here with our trend line, meaning now we are having two confirmation added on our trade. It makes it now a stronger confirmation that once price reaches this level right here, it will definitely go up. It will definitely go up. Why? Because we are having two supporting levels at the same place. Our point of confluence is right here. Moving on to our left, we can definitely see that we came back. We broke our what? We broke our supporting trend line, came back to retest. Came back to retest and then now went down. So that's how we got our zone. Let us move on trying to spot other zones. Okay, trying to spot other zones right here. As I said that we look at previous data in order to determine our future price movement. Our future price movement. Let me just move this on our left. In moving this on our left, I'll just decrease my chart a bit so that you'll be able to see. All right. So far, this is what we definitely have. And us having this, we got this zone from looking at previous data. That whenever price reached this level right here, firstly, it was resisted not to cross above but to go down, and then we broke our resistance. We were above this level right here, and anything above a certain level, that level right there turns into our support. Right here, we came back to retest. The process of a retest was confirmed. We went up, came back to retest. We came back again in this level right here, went up, came back in this level right here, went up. If we're looking at our left, we are going to predict that if price comes back to this level right here, it has higher chances of doing what? It has higher chances of going up because previously it's what it has been doing. Is this recorded? Yes, it is recorded. It is recorded. Let me mark other significant zones. Right here also, I can mark the significant zone. Let me see. Yes. Right here also, I can mark my significant zone right here. In me marking my significant zone, it's a stronger confirmation or a stronger zone. Why? Because it once acted as support and also acted as resistance. So right here, we were supported to go up. We broke our support, came back to retest. And us retesting this level right here, we can definitely see that we are now at a point of confluence whereby we were resisted now more than once. We have our diagonal resistance, and also we have our horizontal resistance. So there are high chances that price will do what will definitely go to the downside. So this would have been our nice sell entry. Why? Because we are resisted more than once. Even if we're moving on to our left, we can definitely see that price came back to this level right here and then went down. This is our fake out whereby price came, broke our level, and then came back within. That's a fake out. A breakout is whereby price breaks a certain level, comes back to retest, and then continue in that direction. Terminology is killing me. Ask me which terminology is killing you so that I can cover it. Let me know. All right. Let me just check for one lost zone. One lost zone so that we can continue. Let me just check for one lost zone. All right. So right here I can see my zone. Small zone here. I'm able to spot my trend right here. I'm able to spot my trend right here, downtrend, which is made up of a series of lower lows and lower highs. So let me just remove this to make things clear, and also remove this. So in me drawing my zone right here, we can definitely see that price was supported in this level to go up. Definitely, we're going to predict that price is also going to go up right here because previously it's what it did. We broke below and came back to retest. Breaking a certain level and coming back to touch that certain level, that process is considered to be our retest. And we were at, again, a point of confluence. A point of confluence is whereby you are resisted or supported more than once. Which right here we can definitely see that we had our resistance trend line and also our resistance zone, which is our rectangle. We are resisted more than once. We are resisted twice. That's our point of confluence, whereby we are resisted more than once, right there, or supported more than once. Hoping we are together. So now let us move on to almost the last slide. We are almost done. Are we together? Kindly let me know under the comment section if we are together. Kindly let me know under the comment section if we are together. Kindly let me know on the comment section if we are together. Can I just get a thumbs up? Thumbs up. Okay. Let us continue. Stop loss and take profit. Stop loss is an order that specifies the exact price at which to close out an open position with a loss, which in simple terms, it protects you from having additional losses if price decides to go against you. It protects you from having additional losses if price still continues to go against you. And the take profit is an order at which to close out an open position with profit, which in simple terms, it is an automatic it is an automatic order that closes or protects your profits for you when you are not there. So these two orders help you to be able to to protect your profits, and also to prevent you from having additional losses and blowing your account or losing your funds. So let us just explain right here. A stop loss in a sell trade will be opposite the direction you are predicting. A stop loss will be opposite the direction you are predicting. So right here in a sell trade, if you are predicting that price is going to go down, your stop loss will be right there above. So just in case price decides to go against you, it will take you out with that portion of a loss, or with that portion of losses. And then if price goes to the downside, that's where your TP will be at. That's where your target is actually at. So stop loss will be above the direction you are predicting, Sorry about that. Let me just turn this on. 2 seconds. Okay. So, as I was still explaining, that your stop loss will be opposing the direction you are predicting. So if you are predicting that you're going down, your stop loss will be above. If you are predicting that you are going up, your stop loss will be below. That's your stop loss and take profit. Can I move on? I think this one is just simple and straightforward. Can I move on? Kindly let me know if I can move on. Kindly let me know if I can move on. How big must your stop loss be? It shouldn't be too big. We're going back to. We'll definitely go back to that. Actually, we'll definitely go to that, whereby your risk reward ratio will be 1:3. Screen is blurry. Is it blurry, guys? On my side, it's not blurry. I'm able to also see. So, what do you mean that screen is blurry? Okay, let us move on. How stop loss and take profit work in a sell trade. The ox price is the price at which the broker is willing to sell to you the base currency in exchange of the counter currency. We'll definitely cover base and codes currencies afterwards in order not to confuse you guys. Let's just stick to this so far. And us sticking to this, I'll definitely take profit to work in a sell trade. So if you predict a sell because you saw that price touched this level right here, our resistance zone, and sold, touch this level right here, our resistance zone, and sold again. Right here, as it was going to be our third touch, you were going to predict that price is going to sell from here, and then take your entry right here, put your stop loss above right here if price decides to go against you, and you take profit at where you are targeting, going to the downside. If price goes to your direction, that's how you profit in Forex. And then if price decides to go against you and breaks above and go to the upside, that's how you will make your loss. So, and how stop loss and TP work in a buy trade. The bid represents the price. The bid represents the price at which the Forex broker is willing to buy from you the base currency in exchange of the counter currency. Still with that also, we'll explain base and codes afterwards so that I won't confuse you guys. Can you trade without putting a stop loss? Yes, you are able to trade without putting a stop loss or a take profit, but that puts your account at risk just in case price goes against you. So yeah, right here, if you predict that price will buy, you will have definitely saw that previously it's rejected in this level right here, went up, rejected in this level right here, went up. So even right here, you were going to predict that price is going to go up, and then your buy entry was going to be right here, and stop loss in this level right here below where you are targeting, and then your target right here. If price decides to go as planned or as predicted, that's how you profit in Forex. If price goes below or disrespects what you had predicted, that's how you take your losses. Are we together? Are we together? Now let's check for our entries on a live chart. So far, kindly let me know if we are together. Kindly let me know if we are together. This is our last slide, by the way. This is our last slide. That was our last slide. So now let us check for our entries. Using what? Using our zone, our resistance zone and trend line. This is where you get your measuring tools are here, whereby long simply means your buys, short simply means your sells. Long is your buys, short is your sells. Hoping it makes sense. So right here, and this level right here, you were going to definitely do what? You were going to sell from here. Reason being, you were going to put your sell entry right here, stop loss a little bit below, targeting this trend, which this is a risk reward ratio of 1:2. You are risking 1 to gain 2. Why were you going to sell from here? Because this zone is a zone that once acted as support. We broke the support, came back to retest, and also we are at a point of confluence whereby we are resisted more than once, which is a stronger confirmation that our sell is valid. Here we go right here. Let us check for another entry. Checking for another entry, we would have had our trend line right here. We would have had our trend line right here, and us having our trend line right here, it gives us a stronger confirmation. Okay, let me just put this nicely. We would have had our uptrend right here, and then took our buys from here. Why were we going to take our buys from here? It is definitely because price once acted as a resistance. We broke above, retested, and went up. Meaning now anything above a certain level, we were looking forward to do what? To buy. So right here, our stop loss was just going to a little bit below, targeting what? Targeting this resistance which we saw or we got previously, which is a risk reward ratio of 1:3 right here. We are risking 1% to gain how many? To gain 3. Are the tools already given to you on the platform? Yes, under the Octa platform, they are already given to you. The tools are already there. They're just there for you to use. So we were going to buy from here. Why? Because we definitely see that it is okay to have a risk reward ratio of 1:3 straight or 1:2. Just be realistic at all times. Be realistic of all times. At the same time, you don't wanna be risking 3 to gain 1. It's just like buying chips for 3 rand to sell it with 1 rand. That's making a loss. You are not making a profit from there. So moving on to this side right here. Moving on to this side right here, we were definitely going to predict that price. We were going to predict that price will sell from here. And then our stop loss would have been a little bit below right here. Why were we going to predict that price is going to sell from here? Why? Because previously it has been respecting this level. And if you can definitely see correctly right here, we would have hit stop loss. We were going to target this level right here, which is a risk reward ratio of 1:2, but we would have hit our stop loss. Why? Because price faked out and came back within. We would have predicted that we want to sell from here because price has been respecting this level right here, but we would have had hit our stop loss from here. Let us check for other entries. Let us check for 2 more entries. And as checking for 2 more entries, let me just zoom in. It means zooming in right here. I'll just drag my zone this side. We were going to predict that price is going to turn from here. We were going to predict that price is going to turn from here, which simply means that price is going to sell from here. We are still using the same zone we got previously. And then our order was going to be right here. Our stop loss a little bit above our zone. We were going to target this support right here. Where did we get the support on our left? So that's how we would have got this entry and we would have profited from right here. So let us now get one lost entry. And us getting one lost entry, what am I predicting when it comes to this pair, which is Euro USD? Let me just draw right here. This is my zone. I'm predicting that once price reaches this level right here, which will be at our point of confluence. Let me delete this for now because we've already broken it. Once price reaches this level right here, which once acted as our resistance, retested, came back, went within, retested it again, now acting as our resistance. Once price reaches this level right here, it will definitely go down from here. It will definitely go down from here. My stop loss will just be a little bit above my zone. Will be a little bit above my zone, targeting what? Targeting this level right here or my zone right here. That is what I will be predicting when it comes to this. That's how you get your entries. I'm predicting that price will be at a point of confluence right here, meaning that it will sell from here going to the downside. Hoping it makes sense. Hoping it makes sense. Okay, how do you connect TradingView and do paid monthly? Now, in order not to pay, use Octa Trading Web. It's totally for free. How do you make sure your stop loss and TP is active? You look here on the side. Those are your pips. These are the pips we use when it comes to placing on our MetaTrader to put your stop loss, to put your take profits. You write down these numbers that are on our left right here. So that's where our entry, we're predicting it's going to be going to the downside. So we'll definitely monitor this right there. So hoping we are together on that one. Hoping we are together. We have came to the end of our session. I'll just ask these few questions and then let's see if you understood. Just make sure to answer. Even if you are wrong, we are here to correct you. Don't worry, don't be shy. Just make sure you give your best. Just give your best. So, what are the two types of candlesticks? Memory, an awesome teacher. Thank you. I really appreciate that. What are the two types of candlesticks? What are the two types of candlestick? What are the two types of candlesticks? Let us know what are the two types of candlesticks. Let's see. What are the two types of candlesticks? Let's get answers coming. Let's get the answers coming. All right. Our two types of candlestick is the bullish candlestick and the bearish candlestick. Okay, a valid trend line is made up of a minimum of how many touches? A valid trend line is made up of a minimum of how many touches? Let's go. A valid trend line is made up of a minimum of how many touches? That's the second question. Yes, bearish is a sell, bullish is a buy. Let's go. A minimum of 2 or more, 3. Minimum of 2 or more. Let's get more people answering. 2 or more, 3 touches, 2 or more, 2 touches, minimum 2 or more, 2 to 3, 2 to 3, 2 touches. All right. A valid trend line is made up of 2 or more touches. A valid trend line is made up of 2 or more touches. How many trends are there, and kindly name them? How many trends do we have, and kindly name our trends? How many trends do we have, and kindly name the trends? How many trends do we have, and kindly name them? Towards, downwards, and sideways, uptrend, downtrend, sideways, trends, up, down, range. 3, down, sideways, up, 3, down, sideways, up, 3, trends. Okay, so we have 3 types of trends, which is an uptrend, a downtrend, and a sideways trend. So, what is the role of a support? What is the role of a support? What is the role of a support? Let's see. What is the role of a support? Just put it together. What is the role of a support, and also what is the role of a resistance? What is the role of a support, and what is the role of a resistance? What is the role of a support, and also what is the role of a resistance? What is the role of a support, and what is the role of a resistance? To suppose price when it comes down to turn to the upwards. To keep support price going up allows you to see price changing direction to upward, creating a buy option. For trend to go up, push price up. The support allows us to see when the price is going down and it turns back to start going up, therefore allowing us to buy. In a trade, price go down, stop, turns and goes up. Resistance is a downtrend. Hey, Kaiser. Resistance is not a downtrend. Resistance is when it goes down, stops, and turns, and goes up. Price pushes from support. Resistance acts as a roof, pushes price to the downside. All right, support acts as our floor, while resistance acts as our roof. Support supports price and not crossing below, but to go up, while resistance resists price and not crossing above, but to go to the downside. So, lastly, what is the purpose of a stop loss? What is the purpose of a stop loss? What is the purpose of a stop loss? What does a stop loss help you with? SL stop you from losing more. Support prevents market going further. And okay, prevents market going. Okay. What is the purpose of a stop loss? What is the purpose of a stop loss? We almost done. We almost done. What is the purpose of a stop loss? The resistance allows us to sell. Okay, stop loss help your account not to be blown. Good. It protects you from additional losses. Good. To protect you from additional losses. Good. Okay, so the purpose of a stop loss, it is to prevent you from having additional losses. We have came to the end of our session. Thank you for joining. Hoping you'll enjoy the session and learned a thing or two. I'm looking forward to the next session, which the next session is on the 9th of May, which is this coming Thursday. We'll definitely be moving forward and adding other confirmations in order for us to come out with one strong, valid trade. As I said, that one confirmation is not enough, even two is not enough. The more the confirmations, the stronger that trade will be. So our next session is on Thursday, which is the 9th of May. Same time, same place. Make sure to invite your sisters, siblings, and so on, your mother, and so on. So there's no age when it comes to Forex trading. Anyone is welcome. Let us empower more ladies and all of that. Hoping you definitely enjoyed the session as much as I did. If you have any other questions, you know where to find me, which is on our Telegram group where our communication takes place. Nonetheless, this is Tiran the Goat, and peace out. Bye, guys. Bye.